Hello guys, hope I am on time this time on Sunday. So as usual, each Sunday live we try to see a subject. Today I will try to explain how short sellers hit the stock market. Now when I say hit, not in the like in the past or it will be hit in the future, but I'm just trying to see what kind of short sellers and who are they and why they are doing this to the market. So I'm just waiting for a little bit when the guys come, and then I can begin as always. So in order to explain what is a short seller, so it's very simple. When you buy a stock, usually most of the time you think that the stock will go up to make money. For example, you buy a stock at $20, either as a day trader or as a swing trader or whatever, because it's not obligatory you be a day trader. You could be a swing trader. Okay, it's the same. You buy at $20 for some time. Okay, if you are a day trader, let's say half an hour or 1 hour or what, so, or 2 hours or the whole day, it doesn't matter. Then the $20 goes to $21 or $22, so you make money. So this is to go long. It means you are thinking the stock will go up. Okay? Now let's see what is a short seller. A short seller thinks the opposite. Thinks that the stock will go down. So you are not going to go long. Okay, so you do the opposite. What you do, this is a complicated thing, because I will show you now in few minutes. I will show you an explanation in a diagram how this works. But in general, what is a short seller is he buys high. It means he sells a stock or shares of a company that he did not own. And you say to yourself, most of the people, they know this, but there are some few guys who are new to trading. I say, how can you sell a property of someone else? It's impossible, right? It's impossible. How can you someone has a car, you sell his car? This is impossible. But in stock market it is feasible, and people hundreds of years they have done this. So it is not a new thing, it's an old thing. Okay, so anyone who have a margin account can do that, because understand that when you have a cash account you can do selling short. Because why is that? Cash account, it means let's say you put $5,000, you fund your account, you apply for a broker, he accepts you find your account, let's say with $5,000. Now before you apply, you should specify what kind of account do you want. Because if you see hello tutorial, good morning from Djellala, Algeria. صح الخوا. So if it is, for example, this it means if you have a cash account, what does it mean? It means you fund your account, and this account is called cash account. So you cannot sell short, you just go long. So you always buy stocks that you think it will go up. But if you think that the stock will go down, you can do selling short. Why? Because you have an account in a broker that it is called a broker, that it is called a cash account. It's just cash, it's just your money. Now, what is the solution to sell short? The solution to sell short is to have a margin account. Now, what does it mean, a margin account? A margin account is very, very simple. It means when you put your $5,000, the margin account, what does it do? It gives you $5,000 from the broker money. That's it. So you will have $10,000. Now here, if you want to sell short, you can, because you have the ability to sell short. Now, let's say, what is this selling short? Selling short is just the opposite of going long. Now, if you think that the stock is going down or will be going down according to your strategies, to your technical analysis or whatever, or you heard the news, whatever is your reason to sell short, so what you should do? What you should do is, instead of clicking on buy for the stock, you just click sell. Now, this is a complicated thing that happens when you put sell. Okay, it's complicated, but in real, you are selling some shares of an investor. But the investor doesn't know that you are selling his shares. Okay, he doesn't know, because no one knows. Whenever you own something in the stock market, it can be shorted. So they don't send you a notice by email or by a phone, and the broker tells you, oh, your shares, they are sold short and we give it back. No, they don't do that. So it's hidden thing. It's hidden thing. Most of the people they don't know. But this doesn't mean that you lose your shares for an investor. He doesn't lose his shares, because his shares should be back. If he wants to sell or something, the broker will do that. Okay? So, in general, this is what we call selling short. It is just to do the opposite of going long. Now, why the people or the short sellers sell short? Because the stocks, they go up and they go down. So when you are a trader, you should think of both ways. Okay, you should think of both ways. Either you go up or you go down. Okay, so when you go up, it's called, most of the people, they are doing this. It means going up, going long. The market is good. All the people, they go long. Okay, this is general. Now, if some people, they sell short, these people are more advanced. Hello, Nasa. They are more advanced. It means they are people who knows better, and they know better things in the stock market. They know how to sell short, because selling short, it is the same as going long, but understand that we have more risk, especially if you want to hold for many days or many weeks or many months. Things can happen at night or after the market close or before the market close. You can get hit and you can have a big loss. So understand that selling short is, for me, is for if you are an intermediate or you are advanced student, you can get initiated to selling short. Okay? Now, how do we know that stocks are sold short? It's just any time where stocks are going down, this means that some people are selling and some people are selling short. Because if you sell your own shares, the stock will go down. So it will help the other people who are selling short, because when you sell your shares, other people are selling short. They will be making a lot of money because the stock moves faster down. That's why when you see selling short, you see that people, they can make a lot of money in a shorter time, better than when you go long. Exceptionally, sometimes, yes. Okay, but for me, I'm speaking about all the stocks. Now, since I have some people who are watching right now and following me, now let's give you the explanation. At least you see the difference, and then we can see how short sellers, they hit the market, and I can give you examples. We can see the index, and if you have questions, guys, you can just ask. So let's go to the explanation thing. So here, explanation. Let's do the explanation. Now I will give you just an example of one day. Here there is candlestick like this, candlestick. This is a day where the stock is going up. Let's say from $20. This is when you buy, and it goes to 22 at the end of the day. Just an example, okay? So here it is 4 p.m. Okay, and here it's 9:30 a.m. The stock begins at $20, $9:30 a.m. Okay, so this thing, the stock is going up. This is called, in general, it's called going. So going long, okay, this is going long. Now this is when the market is going up, so you can make money. For example, you buy 100 shares at $2,000. You put $2,000. The stock is $20. You buy 100 shares. It goes to $22. So you make a $200 profit. This is your profit. Okay, profit. Now, this is going long. Let's say this day, let's say we say it is, just an example, this day is Monday. The stock market or this stock is going good. On Monday, the stock is going up from 20 to 22. Now, let's say from this price, which is $22, just an example, okay? Let's say the other day there is bad news and the stock goes down to $19. Okay, so this is the open. It means the open at 9:30 a.m. There is, let's say there is bad news. Just an example, okay? Bad news. So this is Tuesday. So as giving an example, okay? So the stock opens at $22. It goes to 19 at 4 p.m. Now let's say just we make sure that the stock is going down. So let's say you sell short, you sell. It means when you should hit sell when you go to the stock. Now, if you are going long, always you find this word buy. So buy, it means when you click buy for a stock, it means you are buying more shares. When you buy, you own the shares, you own. But when you sell shares of a stock, you don't own anything. You don't own. This is very, very important to know since you are studying. You don't own anything. You sell. Okay? So when you sell, if the stock is going down, going to 19, so you buy 100 shares It means you sell short 100 shares. How much money you make? You will be making $300 in this day. Either you stay the whole day or you stay 2 hours or 3 hours. It doesn't matter. It means just from 22 to 19. So this is $300. It means 3 points. $3. And it means $3 you make multiply by 100, you will have $300 profit. This is the profit. So a short seller can make money either by going up or going down. Okay, so hope this idea. Hello Saba, how are you? So this idea of selling short, it's so simple. It means it's not complicated. Okay, it's just you hit sell. If the stock goes down, you will buy it again and then you make money. But now here I have explained to you the difference between going long and selling short. Now these are both ways for most of the day traders or swing traders. If you are a trader, you can do that. You can go long, you can sell short. Okay? So it's as simple as that. It's not a big deal. Okay, the stock is going up, you buy. It goes up a little bit, you make some money, you sell. That's it. Now, if you see that the stock is going down, now you hit sell. When the stock is going down, you buy it again, and then you make profit. Now, right now, since we are speaking about selling short, I will tell you how this is done, the hidden things that you don't see. The hidden things that you don't see, I will show it to you now. Okay, just an example. So I'm always trying to explain as much as I can. Now, when you go and you find the sell in the button that you see in your broker, let's say the stock is Facebook. Let's say Facebook, this is the stock, and you see that there is bad news, the stock is going down, you hit sell. Okay? Now, what did happen when you did sell? When you sell, that means you ask the broker. It means you ask your broker for shares to borrow Facebook shares. You borrow from him because you will bring it in back because you just borrow. So you don't own, as we have said. You ask the broker to borrow Facebook shares. Now, when you hit sell and you have Facebook, let's say you sell 100 shares. Now, these 100 shares that you have, these 100 shares, it is in your account. Now, let's say the stock is going down and you are right. You are, for example, right. You are right. Let's say I just give you an example because I don't know right now. Let's see Facebook. Just an example. What is the Facebook is 254. Just an example, okay? 254. This is the price of Facebook. Let's say it's going down to 250. Okay? So $4 down. Now let's say when it hits 250, you have made $400 as a profit. Now what you should do in order to exit the trade? You exit. It means you exit the trade. You don't have Facebook position anymore. So what you should do? You go and you find buy. You find buy instead of sell. When you want to sell, you find the word buy. And what does it mean? it means you have the shares that you have sold, because before you have sold, now you buy them again, and give to your broker, to the broker. Okay, this is a very simple thing. So at first you borrow when you sell, you borrow these shares, and then you buy them back. So now you have no responsibility about these shares. Now, who owns this stock? Let's say this guy is called John. He owns 100 shares of Facebook. So John still owns the shares. But these transactions of borrowing, selling short, buying back, or all these things, John has no idea, because no one knows and no one tells him, because it doesn't affect him, because John, at the end of the day, he still owns 100 shares of Facebook. So as simple as that. So guys, if you have questions about all this selling short, you should ask me questions, and then we can go to another subject. Okay. Hello, Fabian. Thank you very much for coming. Harman, man, people can see our stop loss. You say, Harman, you say, it means, can people see our stop loss? Now, this is a question that I will answer later, because now I am just explaining, but I'm telling you just an answer, then I will explain later the stop loss. Because the stop loss, I will make another live, because there is a big changes in the brokers. What they are doing now is not what they are doing in the past. So stop loss is a big problem right now in the stock market. So it's better that I will explain a little bit in this session later, and then I will maybe next week, if God wills, if we are still alive, I will make a live on stop loss, because there are a lot of things that changes in the stock market, and you should know about them. Okay, so guys, since we have explained in general, how the short sellers do selling short, and I told you it's normal, but this is only in the stock market. You can't do it in other markets. For example, if you go to someone who is selling cars, there is no market where you sell short his cars, and then when they go down, they are not selling good, and then you buy them and then you make profit. It doesn't exist. So that's why the stock market is so dangerous, because that's why a lot of people, they don't understand. They confuse reality with the virtual world of stock market. Stock market is a virtual world, but it has an impact, because you can make money, you can lose money. It's real in terms of money, but the practices are virtual. You don't find them in the real economy. Okay? That's why a lot of people, they get confused about stock market. They don't understand why the company is good and the stock is going down. This problem of confusion is they don't understand the difference. If you understand the difference, that stock market is another world. It's a virtual world. It has its own rules. It has its own mechanics. It has his own principles. And if you don't understand trading, you will have problems, because you will be losing a lot of money and you don't know why you are losing money. And this is, I always explain all my videos. When I explain, I will try to explain bit by bit, because it's a lot of things, a lot of mistakes, a lot of problems that we have. Now we speak to now, who are these short sellers? So you might understand, you say, who are these people? It means everybody in the stock market wants the stocks to go up to make money. Why the other people are selling short? Thank you very much, John Sebastian. Thank you very much. So why the people are selling short? And some, even in the people they speak, they say it's not ethical. It's not ethical. Why they sell short? The market is going up. But you want to understand that stock market has nothing to do with ethics. It's just a practice they have been done, and people that are making money. So if you sell short and you make money, you don't care about what the people say. You have made money. The investor has lost money. That's it. Okay? That's it. It's a reality in the stock market, but not in the economy. In the economy, we don't sell short. You don't sell short something. Okay? You don't. But you only sell in the virtual markets. In the virtual markets that exist for hundreds of years. Do you understand that the first stock market started with, I think, with 2 stocks in Amsterdam in Europe? This is the first stock market that started, and you can read about stock market and history. But this is someone who has made these principles, and these principles come as to us, and the people, they do it, and they make money. Who cares? Who cares when you sell short and you make money? Who cares? But always there is a winner, there is a loser. If the stock market goes up, if someone has sell short and he has been mistaken and the stock market is going up, so he will have a loss. So it's the same thing. So the other guy is making money who is going long. So you see, understand? So the market makes people lose and make money. But the best ones who understand the market, in general, they will make money. But those guys who don't understand the market, how trading is working, they will be losing money because they are always confused. They say, for example, because today the earning news is good, why the stock has a gap down? Sometimes it happens. It's illogical. But they don't understand that the stock market is illogical. How come a small company that doesn't make money, it is only 5 cents, it goes in a few days to $1. Some people have made, they put $10,000, he can make $100,000 in a day. Yes, it happens. Yes, there are exceptions, but it happens in the market. So you ask yourself, how? How is that? How a company doesn't make money, the stock goes so high like this? It is because it is just a game. Understand that stock market trading is a game. Either you know the game, like any other game, like when you play cards or you play whatever, or you play a virtual game on thing, it's the same. It's the same. Now, in order to make money, if you are interested in this game, you should understand how this game works and how you can take advantage of this game to make money. But if you don't know the rules, you don't know what's hidden, so you will be losing money. Always. That's why they say 95% of traders, they lose money. When the stock is going up, you sell short. When the stock market is going down, you go long. So you will be always a loser. That's why some people, they begin with $10,000 in January. At the end of August, they will have 1,000. It means they have lost 90% of their money trying to make money. Okay? But they can't. Now, is it the fault of the market? Is it the fault of the stock market? No, it's not the fault of stock market. The fault is always on the trader. He doesn't know how to trade. Period. There is nothing. And some people, when they want to give excuses, they say, for example, oh, Wall Street have shorted the stock. Oh, it's that guy who bought a lot. Oh, this guy who has sold a lot. Or is it because executives have sold all the shares, so there are bad news? So it means that you always blame others for your own mistakes. Instead of blaming others, the others, they have made money because why you don't do like them? Why when the stock market is going down you don't sell short? Why? It's just because you don't know. You are confused. You have no idea what the people are doing. You don't know when to sell short. You don't know when to buy long. You don't know the stocks. You don't know trading. You don't know news. You have no idea about technical analysis. Because sometimes the stocks go down without news. So the people who are always following news, it's not a good indication. The best good indication is the price itself. There is no other thing. Even the volume is not a good indication, a true indication. For me, for example, when I trade, the most important thing is the price. I see the price moving, then I trade. If the price doesn't move, I will not trade because I don't know where the stock is going. Is it going up or going down? You can do the same, but it needs time. It needs experience. It needs techniques. It needs strategies. And then you begin to experience, to practice until you feel comfortable selling short and buying long. And then you can become a good trader and make money. Now, I see there is no questions at all. I don't see any question, although I have explained. Some of you guys, because you are my students. Some you have seen me answering questions and things. Now, let's go and see how the short seller hit the stock market. Now, the thing that I showed you from the chart, I will just explain the chart. What did happen in coronavirus? I always say coronavirus downtrend. It happens at the end of February and at till the end of March. What did happen this year? Okay, so let's go to the chart and I will explain to you this. Now this is the chart. Okay. Now let's give you an example of Facebook. At least you understand that I'm speaking about Facebook. So I will just show you this in order to understand this. Okay, now look here. Look at this here, at this line here. This is the downtrend. It means where the stocks have been shorted very, very heavily, like Facebook. Facebook belongs to the stock market. That's why when everything is collapsing, Facebook collapsed. Now, for example, Facebook was $217.98 on the 18th of February 2020, as you can see. Now it goes down to 137. So from 217 to 137. You see that the stock has lost a lot of money. Okay? Now, in your opinion, why Facebook has been going down? Okay? Why? So, in order to understand why, you understand that this has a relation with coronavirus, where the news in February, in the end of February, in the 18th of February or so, the news were so bad, and we have a lot of cases in America, a lot of cases of coronavirus cases, a lot of deaths, and we have a lot of information coming which are bad. Companies stop working. There is a laid off of people, of workers. People are jobless. A lot of bad news. But this thing makes the people think that that this year will be a bad year. Okay? So when it is a bad year, so some people who own shares, they get scared, especially when the stock is going down too fast. So they sold. Now, when you sold, it means what you own. There are other people also selling other people who don't want to sell. Okay? That's why it's going very, very fast. Going down. Very, very fast. That's why when the stock goes down, most of the time it goes very fast. Okay? Now, so when it's going down, we have two actions. When the stock is going up, we have only one action, not two actions. So I will explain that right now. So just stay tuned. I will just explain why when sometimes you see the stock, you say to yourself, as you are looking at stocks, you say, why the stocks are going so fast down? But when it's going up, when I want to make money, the stocks are going only bit by bit, 1% each day, 2%, 5%, 3%. But sometimes when the stock is going down, it goes 10%, 15%, 20%, and each daily is going down, down, down. So it's too much. NASA said, what happens to Dustin Delanucci and the other guys? I don't see them in the live stream. Oh, I have no idea. I have no idea about the people because if someone needs me, they send me email. But there are some people who are always with me. They send me text message like with Messenger. So guys, I know that some of you are not writing to me, but there are some people who use Facebook Messenger. Okay, so I will just give you my personal Facebook Messenger, so the Facebook page. So maybe you get interested to send me a message. You just go to my profile and you just send me a message. Even though you are not my friend, but you can just send me a message. This is as you can see. If you click on this, you will find my personal Abdelkarim Ramain. This is my name. You can send me a Facebook Messenger message, and I will be with you. Sometimes you ask me a question. Sometimes you buy a stock. You say, "What do you think?" And so on. Okay. But I have a lot of people. They don't come here, but they are with me. It means they are always with me. They send me what they do, what they buy. They ask me about my opinion, but they are my students. Okay. So someone who asks me in general, who is not my student, he asks me a question, I can answer, but I can't give details if he is not my student. But most of these people are my students. They are in one of the subscriptions. Okay? They are one of my subscriptions. That's why they call me and they say, for example, Karim, what do you think about this? I want to buy a stock. So this stock, what do you think about it? So for me, I give them my opinion. It doesn't mean that when I give them my opinion, it means the stock will go up because I am like them. But according to my strategies, I will just show them what is good in this stock, what is bad. Now, when they trade it, they will see by themselves what I say, if it's true or not. But I can't predict. I don't tell you this stock will go up. But according to my strategies, this stock can go up or can go down according to what I see in the chart. And this is called technical analysis, but it is based on my training, on my strategies and my own way of doing business. Okay? So, NASA, I have no idea where the other people are. Sometimes they are busy, sometimes they work, sometimes it's another thing. So Jean-Sebastien said, my broker is charging me daily fees for short selling plus commissions. Is that okay? Listen. First, almost all brokers stop commissions. I don't know which is your broker, but most of them, they stopped. Even E-Trade, they stopped, that I am with E-Trade, they stop, they do other things. It means they make money other ways. This, I need another thing to explain to you what's going on. And you say fees. I think you get to charge fees when you hold for the night. When you hold for the night, please check this. You hold for the night. You should call your broker and ask him. Okay? So what is your name? Jean-Sébastien. Okay. Jean-Sébastien. What you ask you to do, Jean-Sébastien, I think you are my student. I guess you are my student. So you go to istockmoney, which is my email, and you send me where do you see these fees and which is the broker. Now later in the morning, you can call them. Let's say tomorrow, you call them and you ask them, just as if you don't know. So you ask them, oh, okay, I'm using a margin account and I will do day trading. I buy and sell in a day. So am I charged fees for this interest rate? Because this is called interest rate. You should know that it is interest rate. If it is not interest rate, you should know what is it. Interest rate, most of the time, it is calculated when you hold the position at night, but not in the day. So Jean-Sébastien, you try to see the broker and ask him what is this fee. Now you can send me your broker message that he charges you something, but he should put why. Is it interest rate? But because if you hold, they will charge you interest rate. If you hold the night. So I will just explain this. Okay. What is it? Another question. Tutorial me. He said, teacher, have you an idea about cryptocurrencies trading? Now, cryptocurrencies trading is the same. Is the same thing. It is a chart. It is a prices going up and going down. So you do the same as stocks. The same thing. You can sell short also. If the cryptocurrency is going down, like Bitcoin, you can sell short. If it's going up, you can go long. Yes, you can trade them. It's the same thing. It's a chart. Now, when you use the chart, technical analysis, you can trade anything. You can trade futures. You can trade forex. You can trade cryptocurrencies. You can trade anything. Now, let's see this Jean-Sébastien. He said daily fees for short selling and commissions. Now, let's go to the chart. And now let's go to the explanation so I can explain to you more. This is what I know. If there is something in you, I have no idea. So here is the thing. Now let's say this is the day. The day, what does it mean? Because some people, they don't know the day. The day begins at 4 a.m. It's not only 4 a.m. to 9:30, this is something. From 9:30 to 4 p.m., this is something, p.m. This is a.m. And from 4 to 8 p.m., this is something. So do you know, this is what we call the day. Now, from for example, from 4 to 9, this is pre-hours. Pre-hours, it means trading before the market opens. Now, from 9:30 to 4, this is called the trading day. Trading day, this is the most where we have a lot of volume, a lot of people, a lot of actions, a lot of stuff. Now, after 4, this is another thing which is called after hours, but some people still trade when the stock has a news, or most of the time people they pre hours trading here when there is a news. Here when there is a news, for example, gap up, gap down is formed in these times. Okay, if for example at 5 o'clock or 6 o'clock a company said we lost a lot of money this quarter, just they say it. Now this people begin to short sell here at 9:30. You should see a gap down. Now in general, this is what I say. In general, this is day. Let's say this is the day. Let's say here is the night. Here is the night. If you buy here and you sell here in the day, so normally there is no interest rate. You don't pay a fee. No interest rate. Please check this, because Sebastian has said to me something strange. It didn't happen. I don't know if there is, it does exist. Now, if you buy and you hold for the night, let's say day 1, this is day 2. Let's say you sell at 10 a.m. You sell your shares. Now here, your position at night, in this day, you will have to pay interest rate. Now interest rate, they will tell you how much is it. Now the cheapest one is 1.99. I think it's Interactive Brokers. It has Interactive Brokers. This has, I think, the cheapest interest rate. But some people, they can charge you even 10%. They make too much money from you. Although you may lose money. But this, you should not go with these bad brokers. They ask too much money. You should go with brokers. They ask, if you are doing day trader, or you should go to Interactive Brokers, because it gives the cheapest interest rate. So you should not pay 10% where you can pay 2%. But this is not a big money, but understand that if you do it all the year, it could be thousands of dollars you spend about these fees. So Jean-Sébastien, as I told you, you should send me an email, call them tomorrow, try to understand. You say, okay, you make me a fee. What's this fee for? If they say interest rate, I say, is the interest rate during the day for selling short, or is it after the night? It means when you hold the night. Maybe you don't know. You have hold the position to the next day. You're selling short. Maybe you have done this. That's why they charge you. So you ask, what did they charge you? What for? So you should always be curious when they charge you. Now commissions. Most of the brokers, they don't do commissions. So what's your broker? So it is strange to me that to know that there are some brokers, because this has changed this year. I think this year they have changed. Now they have changed. Why? Because the brokers who doesn't do commission, they got a lot of customers. They think it's for free. But they are, they are get scammed by this no commission. They get scammed, and the people, they don't know. Since they don't know, they don't search. No. You told me, Jean-Sébastien, you say only intraday. It is you that you should call them. Because what I know, they don't charge you. They don't. Maybe they charge you for something else. So you should ask them. Now, another thing, Okay. Quest rate. I will check later for you, man. So, Jean-Sebastien, please send me an email. Tomorrow, I will check this Quest trade. I will check tomorrow, and I will try to help you out with this Quest trade. Because there are some small brokers, they can charge you what they want. If you don't know, they charge you. It means if you accept, if you have a broker with them, and you know how much they charge, if you accept, it's your problem. It's not their problem. So you should see if it's true. You should change from them to another broker that doesn't charge. Because I have never heard that intraday they do that. Oh, I'm sorry. If it is Canadian, that's why it's not American, because USA here they don't. So I have no idea about Canadian market, what they do. But in America here, it's going better and better. But understand that all brokers should make money from you. It's not from someone else. You should pay. Because this is the thing that I see. It's funny thing when the people think that your broker is not making money from you. So from where the broker makes money? From where? It is you who are the customer. Why he gives you the account for free? Why they let you go and buy and sell stocks? Why? Is it for free? Or are they? Who pays them? You should ask yourself always questions. A business is there to make money from you, not from the market. Okay? Jean-Sebastien say we'll change for American one for short selling. I don't know, but here short selling, I don't know, but short selling, they do it overnight. When you hold overnight, like swing. I will speak about this right now when I finish this. Okay, guys. So let's see. Let's see now the types of short sellers, since we are speaking about short sellers. So let's go to the explanation. So now understand that if you ask yourself, now who are these short sellers? We say sellers because they sell. Well, when they begin the trade, they sell. That's why they sell short sellers. Okay. Now, in general, one, it is all traders of the world. Traders, any trader in the world, they can sell short. So, it could be anyone. So, this is A. So, we just have A. Traders, it could be anyone. It could be public. Public, it is us. Public, it means people. Most of the time they don't have big money. Even if you have $1 million, you are just public. You don't have too much money. Now traders, you can find hedge funds. Now hedge funds, they can have billions of dollars in their hands. Billions. Not 1 million or $500,000 or whatever. So we as a trader, we belong to this category because we don't have money. Even if you have $1 million, you don't have that much money. You have just little. Hedge funds has billions. Now you find institutions, brokers, institutions, traders. People also, they have billions. They have a lot of money, like hedge funds. Okay. You find, for example, brokers who have a lot of clients, who have customers, and they sell short using their money. But most of the time, brokers are working for for customers and they get their orders, especially when the orders are big. So for example, for you, when you sell short, you don't need the broker. But let's say a customer has 15 million, he wants to sell short something, a stock, a customer who's very rich. He put 15 million selling short a stock. So this 15 million shares or $15 million, it's too much money. So the broker can help him and the broker get a commission because the broker doesn't trade. I understand that. That's why when I told you always to pay attention. When you see a broker teaching you how to trade, he doesn't trade. How can he teach you without trading? So most of these teachers that the brokers use, they are not real traders. They know something. They try to show that they know the market, but in real they don't. They don't. Okay. So all these are traders. So to short sell, you should be a trader with a margin account. Margin account, it means you can sell short. Margin account, not cash account. Okay. Now we try to see now something else, which is let's see here. We try to see something else. Now we have traders could be swing traders. Okay, swing traders. It could be day traders. Okay. It could be some other people called speculators. I will explain those three categories. Speculator, swing traders, and day traders. So day traders, they work for the day. Most of the time, they use news. Okay, bad news or good news, this is the day traders. How do they work? If it is bad news, they choose stocks according to volume and to price, and they have some stocks and they see that they are going down, they sell short. So day traders, they work every day. Every day. If the market is down, they sell short. If it's going up, they go long. Now, swing traders, they do the same. If they can buy long for long trend, which is uptrend. They can sell short when there is a downtrend. It's the same thing. But understand that a downtrend, you have more risk. You have more risk because the market can go up into what we call a gap up, and you lose a lot of money. And do not play with risk. I will speak about risk later. So these are swing traders. They follow trends, up or down. Now, we try now to see who are these speculators. So I have spoken about these guys. We try to see now. Okay. So here we have 1, we have 2, and we have 3. We have spoken about day traders. We have spoken about swing traders. Now we speak about speculators. Speculators is they have facts in the market, in the economy, facts, and they make an opinion that the market will go up or down. So if they have an opinion that the market up, they buy stocks. They just buy some stocks. If they think the market will go down, they will sell short and wait. They can be right, they can be wrong. So it is traders. So if the market goes down, they can make a lot of money because of the facts they use. But these facts, the market can apply them or no. So because swing trading, you know it, day trading, you know it, I will specify speculators now, and I will explain to you one thing you could understand. Now, let's give you an example. An example of, let's see the chart. I will give you an example, guys. Just to understand how this works. Okay, look here with the Dow Jones. Okay, Dow Jones. So here at the beginning here, so end of February in this year, February 2020. Okay, until here, which is end of March 2020. Now, try to see this beginning here. The beginning. The stock market was going up. It was going up. Now, what the speculators do? Speculators, what the speculators do? Speculators are traders. They always read. They read information from the stock market. They read the facts about companies. They read the news a lot. They see what's going on into the real economy. Okay, they read a lot. So when they read a lot, sometimes they come with ideas. For example, in this beginning of the year, coronavirus. I'll just give you an example. 27th of January, this is our first case of coronavirus. So those people who don't know, first case of coronavirus is coronavirus is known on the 27th January 2020. Now, the stock market was going up, but the speculators notice that it is not only one case, it become 1,000, it become 10,000, it becomes 1 million. So the number of cases are going up. Then they hear that some companies will stop working because of that. They begin to fire people, to let off people. People, they can't go to work. So all this news, these speculators make an opinion that the market will crash one day. So what they do, the stock market is going up, and then they sell short. Although when it's going up for a few days, 1 week or two, they were losing money, but they were waiting for a bad news, and the market will go down. So they have sold short at the high here. So when it's going here, all these that you see, it is their profit. It's a big profit. I have heard that some institutions they made 300, 400, 500% of their money. Now, I'm not speaking about $10,000. I'm speaking you put 50 million and then you get $300 million. This is what I'm speaking about, because these are big firms and they are following the market so good. They are searching and they make expectations. Okay? So I'm speaking about institutions. They have a lot of traders. They have a lot of risk ratio. They work like an institution. They have a lot of money. So they are not just a simple trader with $10,000 or $50,000. Do you understand? But these guys, they can lose money. They can lose $10 million in this trade if the stock market continues to go up. So they sell, so they lose. It doesn't mean that speculator will make money. Because I will just give you an idea about trading, because a lot of people they are still struggling to understand. A day trading, like swing trading, it is a bet on a stock, a bet. It means you will never know if the stock will be going up for sure or going down for sure. But you use your own strategies, you use your techniques. If you succeed, you can make money, but if you fail, you lose some money. So understand that. So there is no sure thing. So don't, if someone tells you that every trade I do is a winner, it means I make money, I'm a winner. This is not true. He is the biggest liar in the stock market, because it doesn't exist. Because tomorrow you buy, the market is so good, next day the market is going down, you lose money. So no one knows. No one knows. Okay? So if someone tells you, I will make money in each stock, this is not true. Okay? So this is in general how the short sellers hit the stock market. They make a lot of money. And when they make a lot of money, understand, see here, I will show you something else to understand this. Okay, so I will just show you again. Okay, so yes, as you can see here, now when the short sellers, okay, they make big money going down. Now, what do they do when the market is going up? They see that the market is very strong. They can't say. They see it. It's going up, going up, going up. So they begin to lose money. What they do? They buy back their shares, or this in English it is called to cover back. So we have two expressions we use. So they cover back, or they buy back the shares and give it to the broker, because they don't own. Now what they do? Here they go long, and they own shares beginning from here, and then it goes here. Also, they make money. So short seller, you can make money going down, you can make money going up, and this is the good trader. And this is how traders, they can make money. But let's say you are an investor. Okay? I'm giving you now an example of an investor. Please, guys, when I show you this, you understand. For example, you are an investor, and you begin, let's say here, you buy because you see the market of 2020 is going up. And analysts said that this year 2020 and the following years are good, are excellent, and you see that the stock market is going up. So some investors, they buy here. So they buy on the top. After a few weeks, they lose all this money. Even though the stock market is going up, and now this is here with their money. Now they lose little money. They don't lose that money because the market has come back. But still, if the market continue to go down, they will be losing a lot of money, because they are investors. They know only one way is to go long. That is the problem. That is the problem of investors. When you go only one way, some years you will be losing a lot of money. Like for example, if I show you 2000, yes, okay, let's see here. I will show you the chart. Please bear with me. Okay, so I will show you the yearly chart. So look at the yearly chart. The yearly chart, what does it shows you? What does it shows you for investors? Okay, now investors, this is the bad year of 2008. Okay, in 2008, 9, 10, 11, 12, 13, 14, 15, this is 15, 2015. This is 2018, and this is this year is 2020. Now it is red because the investors have lost some money here. But what if the stock market has been going up and it crosses the resistance line of 2019 here, 2019, the high. So what does it mean? It means that this will be green. Let's say here, it will be green if the stock market is going up. It will be like this, green. But now it is red because last year, which is 31st December, is higher in 2019 than now, which is September. We are in September right now. Okay, that's why it is red. I will do it again. Yes, I will do it again to see it. Okay, so but understand that this red could change to green if the high or the close of last year. This is the close. If you see Dow Jones, the close, if it goes above this will be green, and it will be good year for. Although they don't make that much money because we have only 3 months, October, November, December, 3 months. It could be going also down and they lose a lot of money. I don't know. I can't predict because I don't predict the market. For me, I trade. But understand that the investors, they make money through the years. They don't care about 1 year or 2 or 3 because here we have 3 years going down. Here 1 year going little down. Here we have a bad year, which is 2008, when the whole market collapsed. 50% lost here. 50% from 2007. 50% lost. Even Warren Buffett, he lost 50% of his money. But Warren Buffett, he will not sell because he is an investor. So he stays 1 year, 2 years, 3 years, 4 years. He all his money he got all his money, and then when he is making money. He is making money only in, so here 2008, 9, 10, 11, 12, 13. 2013, Warren Buffett began to make profit from his shares. Okay? And you can add his dividend because dividend is counted dividend is counted as profit. Okay, is dividend. But in real his profits it means he waited 4 years and the 5th year he began to make money. That's why when you are an investor, you should not think about 1 year. You should always think, as Warren Buffett said, about 20 years. He said when you want to invest in a company, think about 20 years. Think about Apple in 20 years. What did happen? Think about Google in 20 years. What did happen? Think about Amazon. About almost all the stocks. What did happen in 20 years? It happened a lot. Okay? They make a lot of money. It's just because when you invest, you should invest for the long run. Okay? So guys, I think now guys, I have finished all what I want to say. Let's begin to see your questions. NASA said a good example of a short selling last week is WKHS. Let's see this stock. Let's see. I forgot how it is written. W WK 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 HS. Okay. Yes. So as you can see, this stock, we have short selling. We have 4 days. We have 1, 2, 3. The third one on Wednesday it was bad. From 26 it goes to 22, and on Thursday. But Friday the market goes up. So in the future we don't know if it goes up or go down. So this is just an example. Thank you very much, NASA, for your example. Let's see. So you don't hold when short selling for weeks? No. As I think I have explained this, Jean Sebastien. You can hold even for a few months or 1 year or 2, but understand that you will be paying interest rate, and it should be going down for this time. So you should find a bad company that it is losing money. You know that it is losing money for many years, and maybe it goes to bankruptcy. So, but be careful. Sometimes stocks are going down, and then we have good news and they have a gap up, so you can lose a lot of money. So be careful of shorting stocks because you pay interest rate. Now I can explain to you this now with just to explain this last thing about fees. Since Jean-Sébastien asked me about fees, I told you guys. Now, when you go long, you buy thinking that the stock will go up. This is to go long. Now here, no fees. Even if it is 100 years, you own Facebook for 100 years, it stays yours. No one will ask you to pay a fee, except when there is a change in the stock market. But most of the time they don't. Everything is virtual. It's just a virtual. It's not something that it is in a bank like physical gold or silver. It's not. It's just a number. Now, what's the opposite when short sellers? Short sellers, if you hold a night, you'll be charged. You can ask how they do that. There is a calculation. There is a calculation they will show you. You can call your broker how, if you hold one night, for example, you have $10,000 in a stock, how much you will pay. They will tell you how much it will cost you. Maybe it will cost you $1 or $2 or $3. It's not a big deal because they have some calculations. But still, if you pay $3 for each night, you stay 500 days or 300 days, 300 nights. It could be a lot of money. And if you pay interest rate is too high, like 10%, you could pay $15 or $16 or $20 a night. So $20 a night per, for example, 60 days. So you are paying in 2 months you are paying $1,200. So understand, guys, that fees accumulate. It means don't see it is you pay only $1 or $2, but understand that you are going to stay, and this will be a big fine for you, a big fee. But someone who go long for 5 years, he will not have to pay. Because he owns the shares. He owns The guy who short sell doesn't own. Okay? Let's see other questions. Hello, Top Series. Thank you very much for coming. He say, hey, Karim, what are some reasons you shouldn't short sell? Yes, this is a good question. I did not speak about that. Thank you very much. The reasons you should not sell short is, so I can give you some reasons, very simple reasons. Now, no selling short in these stocks. Okay. Now, one, earning news. Now, earning news, you will never know if the stock is going up or down. So this is a major risk. Even if the stock is going down for 6 months, but in 6 months the company has been doing bad, but in this quarter the stock will be here. Let's say this is $10, you end up the dollar is $50 today. So from $10 to $50 up, and you are selling short, what does it mean? It means you have lost 500% of your money. 500% of your money. It means if you put 10K, your broker asks you for $40,000 as to pay. And this is called margin call. Some people, they get ruined in this. That's why do not play the fool when doing this, especially earning news. Okay? Now, if you want to try, just try a few shares and just this. The best thing is if you do day trading is better, because day trading you see your stock in every minute, so you can exit very easily. Now, earning news. Second, penny stocks. If you want to hold tonight, this is a major risk. Penny stocks are manipulated. Understand, they are manipulated. Okay? Now, three, it means companies that they go down for many years. It means these companies, they lose business and you can lose all your money. This is the most dangerous thing. You sell short a company that it is going to a bankruptcy, because bankruptcy, they don't tell you that they will go bankrupt. When they go, they tell you we are bankrupt. That means that there is no stock. Whatever you put, even if you put $1 million, next day they tell you bankrupt, it means your money is gone forever. I have some students who reported selling short or going long. So it's the same thing, because some people, they do the same mistake. It's not only selling short. It's you hold the company. For example, some people, they buy a company, let's say, just an example, $20. For 5 years, it goes to $100. They make money. $100. So they make a lot of money. But the company begin to lose business. But they don't sell. They lose business. It reached to $20. So all his profit is lost. And then it goes down. Now it is $1. He still hold and thinking that because the other people, they are telling him we have new deals. The $1 could go to $1,000 because we have new deals, because they play. Because the CEO of a company will never tell you bad things. Because if he tells you bad things, you sell. He doesn't want you to sell. He can sell his shares first, here, when the stock market is going down, here, He made millions of dollars. The CEO and the executives, they begin to sell first. They sell. So who are these people? Are only the stupid people to stay holding the stock, holding a loser. And now here, the CEO, it means the president of company, say that our company is bankrupt in the morning. They announce this. Now, the stock with $1 is gone. All your money, whatever you put, is gone forever. So these are some things that you should be aware of about selling short or about holding a stock. So this is a good question. I don't have this idea. Now another question, the volume is still high and the up candle is very narrow for the volume. So which means these will still selling pressure. Now listen. People, I have never used volume in my life as a trader. Never. Volume, you are mistaken in the volume. I will tell you now an example of a stock. Just I will show you how this works, because a lot of people, they don't understand volume. Okay? Because volume is something that gives you volume. What is it? Volume. It is shares bought and sold. So you don't know which one is sold, which is you don't know how much. They don't show you. So let's say an example. You find a stock, it is $1. So people, they buy and sell. At the end of the day, it is $1. Just an example, okay? This is 9:30. This is 4 p.m. Okay? The stock doesn't change that much. Let's say $0.01, for example, or something. But you find the volume is 20 million. What does it mean, 20 million for you? 20 million is because they have maybe 10 million in bought, 10 million in sold. So what does it mean? It means the stock doesn't move. No move. Because the people are selling short, people are going along, selling short, no one win. Because you should know that there is a battle between some people who are going long and people against people who are selling short. The one who win, if the selling short sellers win, the stock will go down, let's say to 0.90 cents. So they make money. But if the guys who bought, now let's say here 10 million and here 10 million. Let's say in order that the stock will go up, it means 15 million they buy long and 5 million down. So who will win? So the guys who have 15 million shares bought, because the stock, it moves according to up or down. Are you selling short or are you? Now if 15 million is selling short, 5 million is going long, so the stock will go down. So that's why I don't use volume in my trading. Now you ask me, Karim, what is the thing that you use? Now I will tell you. I will tell you in a very simple thing. Okay? Let's say this is candlestick. The stock is $10. Let's say I buy at 10. I see the stock making a small trend, for example, like this. This is let's say this is a 5 minute chart. 5 minutes, okay? So 5 minute chart. This is how I trade. Let's say how I trade, or 10 minutes. It depends. So if I see the stock is going up, I buy. If I make money, I make money, let's say from $10, it goes to $10.90. I will sell at some point. So I sell and make money. Now, what if I buy long and the stock $10 going to 9, for example, 85 cents. So I begin to lose money a lot. So I will sell and I have a small loss. So this is how I trade. Or I will change my position from going long to selling short, and if the stock here selling short, and if stock is going down, I will make profit. Okay? So for me, I don't see the volume. Volume is 10 million, is 20 million, is 10,000. I don't care about the volume. I care about the price. The price gives you money. The volume doesn't give you money, because the volume it has two things. It has bought and sold. So you can't use it. But stupid people are still using it. That's why they are losing money. Okay? That's why I told you guys, for me, I have special training. I have special techniques. I don't use what the people use. That's why the people, they use volume. It's very going high. But when it goes higher, what does it mean? Does it mean that the stock is going up? No. Sometimes the volume is high, the price is going down. Why? Because most of the people are selling short. But they don't tell you, the broker doesn't give you the number. Because if he gives you the number, you will understand where is the direction. This information, the broker will never give it to you. They can give you, because it will help you, but they don't. Okay? Dorian Gray say, I wouldn't sell short if there is an uptrend, an increasing volume, and wide price spread. Wide spread is because we have low volume. When you say an uptrend, day trading stocks go up and go down. So it's not an uptrend. It doesn't mean that from the beginning, from 9:30, the stock will go to at the end and you make money all the day. Sometimes it goes up 20 minutes or 30 minutes. Sometimes it goes down. If this happens always, the stock can go down and go up again. Okay, it depends. It depends on what's going on to the market. So it's like this. Now Dorian say, volume is activity, right? Yes, as I have explained, it's an activity of shares sold and bought. But the broker, the problem, the broker doesn't give you how many are selling shares sold and how many are bought. Because this information, if the shares are bought a lot, the stock will go up. If the shares are sold, it means there is a selling short. That's how do you know. But the broker will never give you this information. Okay? So, Gianluca Sigarusa, hey, I am Gianluca from Italy. The real problem is that if I wanted to manage with good money management, they should make me pay little commission for a good scale in and scale out, not €5 or more. But money management, you do it yourself. Why you ask... Who will do you? What does it mean, money management? So understand, Gianluca. You can check my training, which is I think how to manage your trading account. Let's see if I find you the thing. You can see videos, and you can see. Let's see videos. I will just try to show you the training. Maybe you get interested to study. Yes, it's training level 19. You have it in ebook. Here is the link, or you have it in videos. This is videos. You can check it in ebook also. I can give it in just to check how do you manage your account, because no one will manage your account. It's you who should manage your account, because it is something that belongs to you. The money is yours. You can't give your money. How to manage your trading account. Okay. Okay. You can see that. Now, managing your account, it has a relation with position sizing, how many positions, how much money you have, what are the risky stocks, what are not risky stocks, what is your trading thing. Are you with aggressive trading or are you with slow trading? There are a lot of things you should think about before you trade, because people are not the same. Some people they like aggressive trading, which they like very dangerous stocks, like penny stocks, like stocks that move too much up and down. Some people they don't like that. They like slow stocks. So it depends on you, not on your broker. And you should not pay anyone to do this. You should just study how to do it yourself. It's like your own money. Can you give your money to someone else to manage it? To your wife or to your children or to your friend, and you say, okay, I'm getting $3,000 a month. Please manage my money. No, this is stupid. No one will accept that. It's your money. You manage it yourself. Okay? I don't know about Italian market, but the stocks are almost all the same. Stocks are going up and down. That's it. If you know how to trade, you make money in any stock. It doesn't mean Italian, Canadian, American, Indian, Australian. It's the same. When you say Dorian said the guys who are the most active will win. No, it's not most active. If you are right, you make money. If you go long and the stock goes long, you make money. If you sell short and the stock goes down, you make money. It has nothing to do with active. You can't be active in the morning at 9:30. You see the stock is going down. You sell short. You wait many hours. You see that you have made money. You sell. That's it. It's not a big deal. It's not active or not active. You are not active. You just sell short once and you buy back once and you make money and you do only one trade. It doesn't mean you go have many trades in a day. This is not. You can do that, but it's not what I am speaking about. Now, Dorian guy said you determine the activity of the selling volume. If the market goes down on lower volume activity and narrow spread, we wait for a test and purchase. No, it has nothing to do with that. Low volume. Some stocks have low volume. Some stocks have large volume, either up or down. It doesn't mean nothing, the large volume. Now, when you have a gap up, you see a large volume. So I will try to find you. Listen here. I will try to find you stocks. Let's see. I don't know, but I will try to do. Okay, let's see. Let's see some stocks. Let me some stocks. Okay, now guys, look at this. Look at this. Look at this, guys. Now look at this stock. How many the volume here? 4 million. On the 21st August 2020, the stock has 4 million the whole day. So the next day, how many? 179 million. It doesn't mean that when we have 179 million that it is large activity. It means you will make money. No. If there is a gap up, also, let me see if there is a gap up in some stocks. You will see that there is, okay? Let's see if there is a gap up. I will show you. Now, I will show you with this example, okay? See this example. X, T, and T. Now here, the volume was 861,000, not less than a million. Now, the large volume, how many here? 32 million. Here is a large volume. Now, it doesn't mean that the stock has gone down. Here, it goes up. So the volume has nothing to do with the price going up and going down. I have just explained to you this. You should understand that the volume has no utility. You don't need it. You don't need it to make money. You don't need it at all. Okay? So just I make sure you understand. If you don't understand this, there is no way I could explain more and more. Top Series said, if you can consistently make 2% per week, then you will double your money by the end of the year. Oh, okay. Making money has nothing to do with making a certain percentage each day. You can make 20% a day, and then the next day you lose 10%. The other day you make 5%. So percentage, what you should see is something very important. You should not lose too much, and you should make too much. That's the main thing. At the end of the year, you will be a winner. Okay? So guys, I have stayed 1 hour 41 minutes. Thank you very much for all your questions, and see you next week. So Dorian Grace said, yes, the volume shows how activity the buying process was versus selling pressure. It means the market will go up if that buying activity continues on widespread. No, man, there is no widespread. I told you when there is a large volume, there is a 1 cent spread. I have explained to you this, guys, so don't make me nervous again at the end of this thing. So I'm trying to explain to you what's going on in the market, and you are going to tell me the opposite. Now, what does it mean, widespread? Listen, when you have 10K volume, for example, the stock is $1, you find the bid and the ask, for example, $1.10. You find that the spread is large. Now, why the spread? Large spread. Now, why is that? Because the market makers makes the spread large in order to buy and sell and make a lot of money from you, because there is no mini traders here. The volume is 10,000 volume. Now, the normal way, the market, when it is large volume, what do you see? You see that the stock is $1 here. The ask is $1, 1 cent only. Here is 10 cents spread. With low volume, here you see 1 cent when we have large volume. That's why if you want to trade the stocks, it should be better doing large volume stocks, because when you sell, you don't get hit. Because if you buy at 110 and right away you want to sell, you lose 10% of your money. This you should understand. If you don't understand this, you will never understand volume. Okay? So here I explain to you into details. I can't go more and explain more than this, because if I go more into details, you will never understand anything of what I'm saying, because this is a broker's stuff. This is market makers' stuff. If you have never heard about market makers and how do they work, you will never understand what I'm saying. That's why, Dorian, I'm trying to give you an easy explanation to understand how the market moves, how the stock moves. Now, if you still think that it's your opinion, I don't argue with something that it is false. Okay, I am here in the market since 2011. I traded thousands of stocks every year. So you don't tell me this. I know better than you. Okay. Widespread in prices from $1 to $3, maybe narrow would be like 1 to... Okay, yeah, you say what you say. If you know all this, you should not come to me here. Dorian, I'm trying to explain to you the real trading. You are giving me your opinion. Your opinion doesn't count because I will show you. You go to stocks and you see them. Don't send me $2 and $3 spread. It's the same thing when it is 10 cents or 5 cents in the small stocks. The same thing. Low volume in a stock, 5,000, 10,000, 50,000. Those stocks, it means there is a lot of traders. When there is less traders, the volume is low. When there is low, the market makers makes the spread large. Now I'm trying just to explain into details that he will check. Now, Dorian, you should go in the morning into any stock and see Facebook, for example. You find 1 cent. 1 cent, you will find 1 cent between the bid and the ask. Why? Because Facebook and Apple and Google, and they are very traded stocks. You go to stocks that are very low, like penny stocks. You find that the volume is very low. When you check the bid and the ask, you find it large. That's why you lose money when you trade them. I have traded thousands of penny stocks when I begin trading, so this is a basic information I know. If you don't know this, you will make a lot of mistakes in trading, thinking that this is because of volume. Yes, bid and ask has a relation with the spread. What kind of spread are you speaking about? The spread has a direct relation with the volume. What kind of spread are you speaking about? Are you speaking about stocks or about another thing? What is this spread of the tick? You should bid and ask. There is no this what you said, the stick. Well, what kind of stick? I don't understand what you are saying. Maybe you are speaking about another language or another thing. There is no stick in the thing. Are you speaking about the tail or the tick, about the candlestick? This has nothing to do with volume. The volume has a relation with bid and ask. That's it. The bid and ask, the market makers look at the volume and see how many people are trading, and then he adjusts by the software how to put. Because he buys and sells from you. He buys from you, he sells to another guy in a second. So his software gives him the prices that he should put in bid and ask. Now, Dorian, bar chart or any other chart, you are speaking about something else, or you are mistaken in expression. You are misleading me in your explanation. The spread, what we call the spread, is the spread between bid and ask. There is no the spread about a candlestick. It doesn't exist. I don't know from where do you bring this. Send me an email, okay? Send me an email and show me. I will write back tomorrow, if God wills, and I will see what you are talking about. Give me an example. Make a screenshot and explain what is this tick. What is it? You say the stick. Show me the stock. Show me the bid and ask. Show me this stick and explain to me what's this that you are talking about. Now, when I understand, I will give you my answer. Okay? This is not called the spread, man. This is not called the spread. This is called the body. So let me give you this, please stop, because you are confusing people here, and when you confuse people they think that you are saying something new. You are saying something wrong. Okay, look at this. This is the last thing I will explain because I'm leaving right now. Okay. Now, this is the candlestick. Let's say this is the form of candlestick. This is called a tick or tail. This is, for example, let's say this is the open. If the stock is going up, it's going up. This is the close. Let's say the open $20, the close $22. The stock is going up. And this is a tick or tail. Okay? There is no spread. No spread here. This here is called the body of the candlestick. Body, not spread. There is body. Here is the high. The high. This is the low of the day. The high of the day. The low of the day. The open, the close. This is the four things that you see in your chart. There is no spread. Spread has nothing to do with the candlestick. It has to do with bid and ask. Now, when you see the bid and ask is here $1, here $1, 1 cent. So when you buy from the market maker, this is what he asks you. So who sells to you is the market maker, the guy who is behind. He's not the broker. He's the market maker. He is working in the market. He sells to you at $1, 1 cent. But if you want to sell to him, he will give you $1 in order to make this 1 cent for him. This is when we have a large volume. Let's say 10 million. 10 million volume in the. This is why he makes this. But if it is 10K, when you see the bid and the ask, for example, you find the bid is $1, the ask is $1.10. So you buy with 1/10. If you want directly to sell, you lose 10%. This is called the spread, which is 10 cents. You lose it if you sell. That is called the spread. The spread is between the bid and the ask. It's not in the candlestick. You are mistaken. You are mistaken, and you are mistaken in the words that you are using. Do not speak about spread in the candlestick. Candlestick, you say the body. From the open to the close is the body. This is how much the stock has gone through the day. From 20, this is what we call the change, not the spread. The change is $2 here. $2 is the change from the open to the close. So it is not the spread. Now you call it spread, but mistakenly. You have been mistaken in using words. That's the thing that I answer. I don't have anything else. Yes. I think you just mistaken spread to the change. Now this in the way we speak in the jargon of the trading, we say the body of the candlestick. This is the change. How the stock has changed from yesterday close to today. This is called the change. And this has happened. But the spread is between the bid and the ask. Thank you guys very much for your for questions and answers. Guys, if you have other questions, you can call me or you can go to good live stream. Thank you very much, Nasa, and have a nice day and nice weekend, and hope tomorrow the market will be good. Thank you very much, and see you next week.